GM, welcome back to another episode of Web3 Academy, your one trusted source to capitalize on the next big phase of the internet. Don't get caught in the hype cycle. I'm Jay Bird, joined by my co-host Kyle Reedhead, and we're carving a path for doers to confidently build and invest in Web3.
Well, today we are going to be talking about, is it time to be investing in Web3? Are we in a bull run or are we still in this bear market that we've been in for the last little while?
You're the bull market believer, and I'm the simplifier to ensure that everybody understands what's going on today. We want to know if you think we're in a bull run. So on Spotify, we have a poll. If you're listening to this on Spotify, tell us whether or not you think we're in a bull run. Maybe wait to the end of the episode, and then you can tell us based upon our opinions whether you think we're in a bull run or not. And before we jump into today's show, we just need to take a minute to hear from our sponsors who make the show possible.
The future of social media is here, and that future lives in Web3 on top of Lens Protocol. Web2 social platforms are broken and ripe for disruption. You see, the epicenter of social media is the creators, and yet they are the most neglected. Web2 platforms like Facebook, TikTok, and Instagram are all essentially robbing creators of their worth. Creators are a new type of entrepreneur, forming new types of businesses. Yet with Web2 platforms, creators don't own their content or their profiles, and that's their product and business. Instead, they are tied to the platforms they choose to create on. Well, just like how crypto is freeing us from banks, Web3 is freeing us from these centralized platforms. On Lens Protocol, creators own their content, own their profile, and even their social graph and followers in the form of NFTs. This allows you to move freely from one social application to another with your content, profile, and followers moving along with you. Lens Protocol enables self-sovereignty for your social graph and interoperability across the internet. At Web3 Academy, we believe this is the future of social, and that's why we've partnered with Lens to ensure that the path of social media is heading in the right direction. Visit lens.xyz to learn more today.
What if I told you that industry pioneers from flagship Web3 brands such as Consensus, Polygon, Binance, Unstoppable Domains, Ledger, and Uniswap will all meet up in one place this summer? You don't want to miss this. I'm talking about the Epic Web3 Conference taking place in beautiful Lisbon on the 9th of June with over 20 curated talks, speed consultations with Web3 experts, networking sessions with investors, and even the opportunity to raise funds. This conference has it all, and you'll get the tools you need to succeed in this industry. Plus, we at Web3 Academy will attend and host a community meetup with you and the others from our community before the main event. So come along, meet us, network, and start building alongside leading Web3 innovators. We can't wait to meet you. Remember, Lisbon, Portugal, 9th of June. We've got a 15% discount for you, but ticket prices go up every few days, so get your tickets today by using the link in the show notes. Enter the promo code Web3Academy15 to secure your spot. Or if you become a pro member, you can get an even bigger discount. So go pro today, and we'll see you in Lisbon, Portugal, on the 9th of June at the Epic Web3 Conference.
Welcome back. Okay. Topic of conversation today. Are we in a bull run? Kai, before you answer that question, let's start by setting some table stakes here. What is a bull run? Let's define that first.
Basically, a bull run is just a period of time where prices go up. You can be in bull runs in different markets at different times, right? Many of us anyway, are familiar with the crypto bull run or the hype cycle, as you alluded to at the beginning of this show. That was in 2020 and 2021. We would call it a bull run. Prices were going upwards for 2 years straight, basically. And then we entered a bear run or a bear market, which is when prices go downwards. And that happened over 2022. And now the question is, prices have started to go back up. Are we actually in a bull run? And the thing to understand here, why this question is kind of coming about, is prices can still go up during a bear market. It's just, is it sustainably going up long? Or is it what people will call like a trend here? We're going downwards, but every once in a while you have these crazy spikes up. And especially in crypto, these spikes can be very, very high. Like we've seen over the last couple of months, prices have gone quite high. And so the question is this a bull trap, or are we actually in a bull market and we can expect to see prices continue to rise over the coming months to years?
Great questions of, is this a bull trap? Because that leads where we're going to end this episode is, what do you do with this information, right? So it's great that we're in a bull market, or maybe we're in a bull trap. What do you do? How do you ensure that your investments are going well and that you're investing confidently in the space?
You listened to our roll up last week. We talked about the A16Z State of Crypto report, which the big thing we focused on was the positive feedback loop, the cycles of crypto, not necessarily the cycles in terms of like bull and bear markets, but in terms of the cycle of innovation and adoption, right? Which part of that is price. When price goes up, we start to see interest. When there's interest, we start to see new ideas. When we have new ideas, we see new businesses, right? And that is the idea, the foundation of how crypto and Web3 sort of evolves and grows. And so again, to start that cycle, we need prices to go up. We typically need a bull market for that to happen. And so that's kind of what we're trying to uncover here, which just tells you about where the market overall of Web3 goes. One, about price, but also in terms of adoption and innovation.
Right, which really connects to the two types of investments that we talk about here on Web3 Academy, is investing your personal capital and then also investing in terms of being a participant of building a business in Web3.
Your time.
So we're answering both those questions. Okay, are we in a bull run? Let's just start with the direct question.
My answer would be yes. I think we are in the early stages of a bull run. I think when we think of bull run, we probably think of the craziness that happened in 2021, where ETH and a bunch of different tokens were just going through the roof every day. It was like 10% up, 20% up, like just craziness. That's a late stage of a bull run. I think we are in the early stages of a bull run. And you can look at that in a few ways. I mean, one, you can just look at price, right? We've now been kind of on an upwards price trajectory for the last, let's say, basically for all of 2023. But actually, I would say even longer than that. I was talking about the business cycle, which we'll get into what that is in the show here. But talking about the business cycle last summer when I was in Lisbon, actually, I remember we did an episode where we talked about this. And that was around the time where ETH actually bottomed. So in June of last year is when the prices hit all-time lows, or the cycle's lows for Ethereum, which ETH hit around, I think it was like $850, something around that. I mean, now today we're at 2000. We're up more than 100%. It's hard to say that that's a trap at that point. But when you look at are you in a bull run, you need to look at a bunch of different metrics. So in this space anyway, you could look at macro. So what is macro telling us? So in terms of interest rates and liquidity, is that leading us into a bull run? So you want to look at that part. You can look at technical analysis. We don't really do a lot of that here, but it can be some important stuff. There can be some technical factors that could show you're in a bull run. And then you could also look at on-chain metrics. You can't do this in any other market, but you can in Web3. And you could look at, are we in a bull market just in terms of on-chain activity? Those sort of three things. And the other thing you would look at would be sentiment. What do people believe? How are we feeling? Right? If you remember, if you were in this space back in 2021, you knew you were in a bull market because you were going absolutely crazy. You were just throwing money around everywhere. Like that is sentiment for a bull run, but that's later. That comes later in a bull cycle. And I think we're very early where sentiment is not there, but I think macro is there. I think on-chain is just starting to happen. Technical analysis, I think we've just sort of hit that point to sort of solidify that we're in a bull market.
The only thing that's not in a bull market is NFTs, that's for sure. But that tends to happen when crypto goes up. A lot of people move their NFTs back into ETH often, or even Bitcoin. They move it out of ETH and into Bitcoin. Okay, do you want to jump into either of those? Do you want to talk about macro TA or on-chain, or do you want to keep moving through?
Up to you. It depends on where you want to ask the question first. I mean, I think one thing that can be confusing to people is when we say, okay, we're in a bull run, there's other people that go, but everybody's losing their job and there's banks failing and the economy is like basically collapsing. How the heck can we be in a bull run? I think this is a thing that I know when I first got into investing and I didn't quite comprehend that. And I think when you see headlines right now, you see that everything is falling to shit. Inflation is high and banks are failing and everyone's cutting jobs. Like to most people, you're probably like, how the hell is it a bull run? That seems like very bearish. How are prices even going up during times like this? And so I think before we get into diving into any of these, macro or any of that kind of stuff, I think it's important to understand that markets don't depict what's happening in the real economy, right? They're actually typically forward thinking. They tend to be 6 to 9 months or so ahead of the real economy. So we are in a very bearish scenario for the real economy, meaning for us humans in the terms of like getting jobs and making money and having access income, like all of that stuff. I think we are almost at a peak low in terms of that. And it's probably going to see a little bit more pain for the coming months in terms of the real economy. So I think there's more layoffs to come. I think probably more banks to fail. So like in the real world, things are not bullish whatsoever. It's a very scary time, I would say, but markets aren't pricing what's happening right now in the physical world. because remember, markets are kind of like a game. It's right. It's investing. And the point of it, not like a casino, because there are real fundamentals around this stuff, but the idea of it is you want to predict in the future what companies are going to do well or what tokens are going to do well. And so your job as an investor is not to invest in how the world is right now. If you do that, you're way behind and you're always going to lose. Remember, you want to be ahead of others, right? And so while a lot of people right now might be saying, I don't have any money to invest, you got to go, well, what about in 6 months from now? Will they have money to invest? And if they do, what will they invest in? Because again, the way that markets work, you want to be in that thing before others are in that thing. If people are already in that thing, that's when you might want to be leaving that thing. That's the kind of mindset you need to have with markets. And that's how the game of markets works. So I would just say the real economy does not mirror what's happening in the markets, which is why we're seeing this sort of the real economy going down and down and down and looking very scary. Yet equities are doing quite well, at least in the tech sector, not the banking sector. But crypto has done very well. Gold is doing really well right now. So I think in some markets we are in a bull run. And then in others, like the real economy, things are looking pretty gruesome.
So if the real economy isn't doing well and there's talk of us going into recession and inflation rates are continuing to, likely going to rise again. We'll see what happens at the next release. What's driving this bull run? What's pushing crypto up at this rate right now?
Yes. So I talked about this a few months ago to our pro members. I did a report on sort of like what drives the value of digital assets, but it kind of meant in all technology. And really, you could think of it in most markets. But really, the thing that drives markets and has been for decades, to be completely honest, right now, is what's called liquidity. And that's basically just the government's printing money. When the governments print money, that stimulates the economy. They do that to help the real economy. That's the thing that's struggling right now. But when they print money, what they're doing is debasing the currency. And so what's happening is that we're not really seeing growth in any markets, to be completely honest, other than in crypto. But like for the most part, the S&P 500 and most equities, there's not a lot of growth in businesses. What's happening is we're actually just debasing the currency by creating more liquidity. We're printing new money. We're inflating the currencies, you can call it. Debasing is a better term here. And so what happens is when you debase the currency, we call scarce assets or hard assets, they rise in price. So gold rises whenever we print money. Crypto, which are hard assets, those now rise whenever we print money. Stocks, which are hard assets. There's only so many Amazon stock or so much Google stock, right? So these are all hard assets that people want to be in. You want to own land because you need a home. People want to buy services of Google or of Apple. They want to buy phones. And so regardless, people are going to buy those things. And when we debase currency, the things that, are the equity of those are going to go up in relation to the currencies themselves. There's actually some pretty crazy charts. I don't have them on hand, but if you look at, let's say the S&P 500, which is the look at the equities of all the top 500 companies in the US, and you minus the amount of money that has been printed, it's completely flat. There's actually been no growth in the S&P 500. The only growth you see, which if you look at a chart right now, there is a lot of growth. It's almost all because of printing money. And so the reason markets are going up right now is either because people are predicting that the Fed is going to print money or because money has already been printed. And in this case, for crypto anyway, money has already been printed. Now, in the US, some money has been printed. This is to backstop the situation that happened with the banks. Now, it's debated on will that continue, will that not continue? But more so, crypto is global. And more we're seeing that the participants in the crypto space are actually outside of the US. And if you look at countries outside of the US, like China, for example, they have already started to print a lot of money. They are already in what's called your liquidity cycle or your business cycle in the phase of printing money. And so global liquidity is on the rise. It wasn't on the rise in the US earlier this year, though it is actually now very much on the rise because of what's happened with these banks. But also, I think a lot of people are under the assumption that we have hit the sort of like peak of this liquidity tightening. So basically the Fed not printing money and raising interest rates. We have hit the peak of that. And so what investors are assuming is that now moving forward, interest rates will likely go down. We will start to print more money. And again, you want to be ahead of everyone else. And so people are starting to pile into those hard assets. This is why you're seeing gold at all-time highs. You're seeing Bitcoin back up to 30K, Ethereum now at 2K. And so we're starting to see a change in most of these hard asset markets. Even technology stocks are starting to do quite well.
And so you talk about banks printing money, the global economy printing money, the tightening, loosening, every government's got the engine going and just money printer on. Make the connection to crypto for us though. Like that obviously puts a lot of money into the entire economy, right? But why is crypto in particular seem to be in this bull run right now? Like you said, the S&P 500, if you take out money printing, is actually flat, but crypto, ETH is up 75% in the last 3 months. Like there is big runs happening in crypto. Why?
So first, let's understand, why do governments print? Printing is something that's really came along. I mean, we did it back when the wars were a thing because we just needed to stimulate the economy and we just didn't have any other way to do it. And then it really became a useful tool with the financial crisis. In the world that we live in right now, we don't have the ability to stimulate the economy from humans, which is what used to stimulate the economy through the 60s and the 70s and the 80s. The population was growing and the rate of growth was actually expanding. And so if you have more people that are working, that are innovating, that are buying things, that is a driver of growth for countries. Now, the problem is, especially in countries like the US and China and Canada, et cetera, the rate of growth in the population is actually decreasing. So there's less and less people actually coming into the markets to buy things and to create jobs, et cetera. And so as a result, we actually are fighting against the opposite of growth, right? Like you can't really have growth if you don't have more new people coming in to buy, right? And so what has happened here is the government now needs to, or countries now need to actually print money to stimulate the economy, to get people to buy more things, right? To increase, like, let's say, GDP. And so this is why printing money has become so important. And now this always goes in phases. Print a bunch of money, it stimulates the economy, which gets people to buy things, companies to take out loans and hire people, et cetera. And the economy gets all excited and things go well. But then what happens is it goes too well. And that basically the supply and demand effects, too many people are buying things. There's not enough supply. So prices go too high. And then what happens is inflation occurs. And so what we need to do is go, whoa, slow down. We need less people buying. And so the government increases interest rates. They stop printing money. And then that brings inflation down. Ideally, this is the ideal scenario. But then typically that goes too far, right? Now all of a sudden the economy is like dying out. We're like, shit, we need to print more money to stimulate again. We go through these phases. This is the business cycle. This is what I've talked about many, many times. If you're a pro subscriber, then you know all about this. The idea of this, and actually, let me just share screen here so you guys can have a better idea of what we're looking at. The economy expanding and then contracting. This is what I just explained to you. This chart that we're seeing, if you're listening on the podcast, it shows 3 of these cycles of it: contracting, expanding, contracting, expanding. And the key point here is that over time, it's continuing to go upwards. So we are continuing to have growth, right? Now, the reason for this, though, especially right now, is because we are continuing to print more and more and more and more money, right? And what that means is we are continuously debasing our currencies. Now, some countries, they've done this and went through hyperinflation and their currencies became completely useless. Places like Venezuela, Zimbabwe, et cetera. We don't have that in the US and Canada, but compared to hard assets, it is just consistently being debased. And so real estate, gold, and now crypto are basically a hedge against monetary policy. If we're going to print our currencies to nothing, gold used to be the answer to that. Land or real estate was also, and still is, the answer to that. Now, on the crypto side of things, it is another answer to that. It is a different solution to it, except for the fact that it is a solution to monetary printing. It is also a technology that can do so much more. It also innovates on money and makes our existing money, like fiat money, much better, i.e. stable coins, right? It makes money move faster. It makes money move cheaper. It has new means of understanding money and having financial assets, things like NFTs, et cetera. It is a hedge against monetary policy, and it is a technology. So it's like a combination of gold and like Apple, right? Or Google. It's basically both together. And so when you have monetary policy that's in our favor, when you're printing money of low interest rates, you have the idea of we need to hedge our currencies. So we need to buy gold. But then at the same time, when you're printing money, you're also like, hey, this is a bunch of innovations happening. We need to buy technology stocks. Well, crypto is the combination of both of those, which is why it's the fastest horse in the race. So it grows at a much, much, much faster rate than gold itself or than technology stocks. It's kind of a combination of the two. Was that a relatively decent answer?
Yes, great. And is that also why crypto falls much harder? Because the contraction is deeper as a result of the fact that the rise is so much bigger as well.
Yes and no. I think the reason that crypto falls much deeper is because generally there's a lot of retail people that hold on to it. So there's a lot more FOMO in crypto than there is like, you don't FOMO into real estate. And some people definitely do, but a lot less because it's more expensive and harder to do that. It takes a long process to buy a home, right? You don't really FOMO into gold as well, because again, like one, it's not a lot of retail people buying it. And it's tougher to buy than like, what are you going to do with your gold? Right? I mean, you can buy it obviously on stock exchange as well, but to buy real gold. And so crypto is because it's newer, number one, just like Amazon and the internet and all that kind of stuff, all the internet stocks back in 2000, they also went down 98%. So this is nothing new. There's the fact that it's new. And then there's just the fact that it's a different type of investor that's in here. And a lot of people just FOMO in because it's so easy. It's so liquid. And so liquid things that are really, really on the growth cycle, they go crazy when we expand. And they come down a lot when we contract. But I mean, it came down a lot. Here's the thing. If you were in crypto before the expansion in 2019, you bought ETH at $80, right? And so even though it came down a long way, it went down to $850. So you still 10x, even at its low. So like, it's still going up way more than most people think. The problem is most people just happen to come in at the top in 2021. So it just feels a lot worse.
Because that's when sentiment is highest.
Exactly. Which is why we want to be talking about this stuff now. And actually, we've been talking about it for months because we don't want our listeners, all of you at Web3 Academy, I don't want you FOMOing in at the top. I don't want you making the same mistake that most people do. We want to be well prepared and positioning ourselves ahead of time. You want to be starting your businesses early. You want to be investing your capital early before the others do. And you want to be putting it in the things that everyone else is going to come into when everyone realizes, okay, the markets are good.
Okay. So now that we understand liquidity is on the rise, global liquidity is increasing, there's an impact on the markets and on crypto in particular. I think there's a lot of fear around inflation and high interest rates. It doesn't seem like that problem has really been solved. The government's been doing what they can to do that. But now all of a sudden, as they turn the money printer back on, doesn't this just mean that we're going to be forcing sustained high interest rates?
Yeah. So let me try to explain this as best possible. So after printing so much money and over the last couple of years and giving away a bunch of money, like in the US, they actually just gave checks to people. Canada, the same thing. Many countries did this. And so what they did is they stimulated the economy. They increased demand because they literally just gave people money, and they put interest rates at zero. So banks could loan out as much money as they wanted very easily. Companies could take out massive loans and literally not have to pay anything for them. And so that means lots of spending happens. When lots of spending happens, if we're not producing more, then what you have is a supply and demand issue, right? There's more demand supply, which means prices have to go up. This is just how all assets in the world work, not just crypto. We talk about supply and demand a lot in crypto, but also in terms of like bread and like anything that you're going to buy, your energy and all that kind of stuff. It's all supply and demand related. And so we've had this pretty high inflation and it went up very, very fast. And that's what's kind of scared everyone. I think we went up to, was it like 8% or 9% or something in the US? That came from really giving out all this money, printing a lot of money and giving it to people. It also came as a result of COVID, right? Just locking down the economy. So we couldn't make any more goods, but people could still buy things online. And then also from the war, right? With Russia invading Ukraine, it kind of disrupted supply chains. And so we just had a lot of issues there in terms of being able to get goods to places that needed them. And so again, we had that supply demand crunch. In my opinion, I think inflation is already falling very, very fast. I think there's a lot of lagging indicators here when it comes to inflation, which I'll get into in just a second. And so from everything I've looked at and from what I've seen in inflation, I think that inflation is falling off a cliff and it's not even a concern anymore. And I think we can lower interest rates and start printing money. It's not going to impact inflation. The reason I say that is one, the supply chain issues that have been a big problem in 2020, 2021, and 2022. Those are basically all solved at this point. So why do we still have inflation? Well, you have inflation because things like rent, for example, remain very, very high for a long period of time. Real estate went up a ton in 2020, all the way to 2022. It's now down, but people still pay the same rent as they did before. It takes, a lot of people go on a year-long lease, right? So the next time they go to renew their lease, their rent will go down. And this is happening, but that takes time for that to occur. This is true for a lot of things. Businesses that are selling products, they're not going to lower their prices on their services or their stuff right away. They had to increase their prices because food was really expensive and gas was really expensive, et cetera. but over time that goes down. And so if you look at inflation right now, it's going down a lot. And it really started to go down even last month. We're down to 5%, I believe was the last reading in the US anyway. And that happened because we're starting to see things like rent beginning to come down. Those are the lagging indicators of inflation. And so I think we're going to start to see that go down significantly over the coming months. Now, a lot of people are like, well, but won't inflation go back up? And a lot of people are looking at the 70s to compare to, because in the 70s, we had inflation spike from money printing, and then it went down, and then it went back up like crazy. Then it went down, and it went back up even more. And so it's like, everyone's afraid of like what happened in the 70s. I think the big thing to understand, again, if we go back to what caused inflation, it's supply and demand. The reason that we had such high inflation for sustained periods in the 70s was because the baby boomers, which is the largest group of population, I think in history ever, were all entering the workforce in the 70s. And that is extremely, extremely inflationary. Why? Because there's so much demand when a bunch of people, the largest group of people, all turn whatever, 25 or whatever age they were, they all start making money, getting jobs, and they all start buying homes. What do they have to do? They need to buy fridges and couches, and they need all these appliances and things. They're having kids. So it's like the demand to buy things was so high, and they had the means to because they all had jobs. And so that created this like demographic style of inflation, which of course occurs for a long time because baby boomers kept coming in year after year after year, right? Mm-hmm. Now, we don't have that anymore. There is not a large group of people coming in to buy anything. In fact, we have the opposite, right? We have a large group of AIs and robots that are now working for us. And when you have AI that's writing code and building apps or writing newsletters or writing copy or creating images instead of people, you actually have a very, very deflationary phenomenon happening. You got to understand that technology in itself, technology is deflationary. That's the entire purpose of technology. You create tech to make things more efficient. More efficient means that it's less inflationary. You think of like when TVs first came out, big screen TVs, they were like big screens for like $10,000.
$10,000, right? Yeah.
Right. When I was a kid. And then like now I can buy a TV for like $300. It's the same TV, but better and bigger. That is extremely deflationary. That's happening with everything right now, with energy. We have some issues with energy because of oil, whatever. But ultimately with solar and all this stuff, like energy is becoming much cheaper. The ability to build a business is much, much, much cheaper. Communicating with people is much cheaper. Like all things are actually getting cheaper over time, and AI is only going to speed that up. So we actually have a lot of deflationary things happening right now. And if you want to think of AI as like a demographic, that is a massive deflationary thing. And then one final note on inflation, a banking crisis is extremely deflationary. Why? What causes inflation? Spending, right? And so when businesses and people can take out loans, well, that might be an inflationary thing. When the banks are all collapsing, no one's giving out loans right now. No one is taking out mortgages. No one is taking out a business loan. In fact, they're all firing people because they're like, shit, we have no money. So again, that is extremely deflationary. And that's why I think inflation is going to continue to fall very, very fast. And actually, I have up on a chart here, this is the true inflation, which is an on-chain metric of inflation. So if you look at what the Fed comes out with, they come out every month with an inflation number. And this is looking, in April, they'll come out with one from last month, right? So it's actually a month delayed, and they look at certain metrics, whatever. This is looking at all these metrics plus many, many more, and it's all live. So it's looking at APIs and oracles from around the internet to understand pricing of everything. And it's got a formula to understand where true inflation is at right now. And according to this, we're already at 4.28%. So we're actually even lower than what the Fed has put out at the 5%. So I don't believe that inflation is here to stay, which means I think that interest rates are quickly going to come down.
And just to be clear, to give some more credence to this chart you've got pulled up, this chart also showed that we were at 12% a year ago when the Fed was saying we were at 6 or 7% at that time. So this chart is saying we're lower now than what the Fed is saying, but it was saying we were higher than what the Fed was saying previously.
Correct. The Fed also, there's like, does the Fed manipulate the numbers?
Mm-hmm.
They're also always delayed, as I said. So you never really know.
Let's not go down that conversation. Okay. Assuming our listeners are on board with this, and I think they all are. If you're still listening, I'm sure you are. Let's talk about what this bull run will be like. Will it be like the last bull run? What should we expect this time around?
Well, so first, I just want to say, if you're listening to others, a lot of people are not saying that inflation is going to come down. The consensus right now is that inflation is going to remain high. That is, if you're on Twitter or you're listening to, I don't know, the media, and you're listening to most analysts out there, most are actually saying that inflation is going to remain high. I am under the belief, and some of the people that, in my network that I communicate with are under the belief that the opposite is true. So far, what we're saying tends to be playing out. But again, you never really know. This is not a certainty, what I'm saying. I want to make sure that that's clear. It is about odds and probabilities, right? If another war happened or something else happened, inflation could go back up, sure. But ultimately, just from what I'm seeing and just kind of understanding the broader markets, it seems as though it's coming down. This also doesn't mean that interest rates go to zero tomorrow, right? It means that we can think that in the future, it's more likely that interest rates go down if we believe that inflation is already down or going down, right? So you got to understand, like, we're again looking in the future. It's not a straight line in either direction. It's just a probability that if inflation is actually down, it's more likely that interest rates begin to go down, which means it's more likely, especially if we're in a recession and things are tough, it's more likely that we print more money. What happens if we print more money? Asset prices go back. So the probabilities are in our favor if you believe this stuff. What's the question? I guess it's, how do we see the cycle playing out?
Yeah. Will this bull run be like the last? What should we expect?
Yeah, I mean, and this is very interesting. Just to give a picture to those who are here watching, crypto is very cyclical, and it's done almost the exact same thing 4 times now, which is just crazy. On this chart here, we can see the bull run that happened in 2013, 2014, and then the long bear run or bear market that happened in 2015. And then we saw the point at which that kind of changed. We went on another long bull market from 2016, 2017, 2018. And then again, 2018 is when it started to crash, and we went in a bear market all the way until 2020. Then what we just talked about, it went up and up and up until 2021. And then we went all the way down. In these charts here, which is very, very cyclical and almost to the date, it's very crazy how cyclical this is and accurate. We see that we've crossed the same sort of trend lines as the last bear markets to enter again a bull market. So we can just see that over the next couple of years, according to these cycles, we can expect things to go up in very large amounts once again. Will we have mayhem and the craziness we had of the last bull cycle? It's a very hard one to predict. I don't know. I would say we are going to see some pretty incredible numbers again. I think that prices will do their 10, 20x. You will have things that 1000x, just like we had a couple of years ago. There will be FOMO. There will be craziness. There will be scams. There will be all the stuff. There will be mania. Will it be the crazy mania that we had in 2021? I'm not sure, because that one is a bit different because we were all trapped in our homes and we were all being fed free money from the government. And so the wildness that ensued in that bull market was pretty crazy, though. In 2018, 2017, it was also crazy, and we weren't trapped in our homes. So cycles play out. They tend to be very similar because, again, it's just human nature, right? When you look at technical analysis, the chart I have, people are like, yeah, TA is weird. I don't really get it. It's a bunch of lines on a chart. All this is showing human psychology, right? Right now, we're in a part of this cycle where everyone's super bearish. Everyone thinks that we're all screwed. The economy's messed and crypto's dead and blah, 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 blah. And interest rates are high and they're never going to go down. So bearish. And that's why we see prices go down so far. But then what happens? Prices start to go up. People start to question. People start to FOMO back in. And we go through this crazy mania again where everyone's making money and everyone's on top of the world. And we're going to go in the super cycle and blah, blah, blah. It happens every time. And this is the hype cycle that Jay and I referred to at the beginning of every single episode. And look, these hype cycles are awesome. There's so much opportunity inside of these hype cycles, but you need to separate yourself from the hype cycle. You need to watch it, watch what other people are doing, watch everyone lose their minds and go crazy, and wait for the moment where your mom comes to you and says, hey, should I buy this Solana thing? You know what I mean? Those are the things that happen every single time. And just watch, guys, in the coming 6 months, or even it's already starting, people, if they know you're in crypto and you're in Web3, they'll come and they'll start asking, what should I buy? Should I be in this? Should I be investing? They weren't doing this the last year and a half, which was the best time to be buying the whole time. So the same things do play out. What I would say will be different this time is in terms of liquidity. That's what drives Bitcoin and ETH, these big assets that are sort of these monetary hedges and these big tech platforms. That's what drives their price up for the most part. But when you get in the hype cycle and things get crazy, it was DeFi summer in 2020 that really started to get Ethereum to pick up. And then it was NFTs that made things go like just bonkers in 2021. And so they had their own little like mini hype cycles within it. Those will happen again, but it won't be DeFi, and it won't be, monkey pictures of NFTs. It'll be something different. Now, what that will be.
So what's it going to
be? That's the thing I don't know. People say gaming. We say gaming a lot, and
it's been saying gaming hasn't happened yet.
I don't know. And, people say, well, layer twos and all these things. It's like, look, the world doesn't care about layer twos. We got a lot of people to come into crypto in 2021 because NFTs were cool. It was culture, right? You had big brands. Like, they're not coming in because Arbitrum token has launched. Most people don't give a shit about that, right? But they might buy an Adidas NFT or whatever, right? Like that makes more sense to mainstream. And so what's the thing that really drives the adoption this time around, or like brings in a lot of people? It's hard to say. I actually think that this is the first cycle where we actually have tokens that are sustainable and profitable. We've never had this before. Even ETH was not technically that in the last cycle. This is the first time where we do have ETH specifically, which now is a profitable business in terms of it makes a lot of revenues from its fees, and it doesn't have a lot of expenses because it uses proof of stake, and it is deflationary, which is amazing in an inflationary or in a environment where we're printing lots of money, right? ETH didn't have that before. Bitcoin had that narrative. So we have those things. We also have a yield, right? So if you hold ETH and you stake it, or you hold one of the liquid staking tokens, you can earn 4 to 5% in a fairly limited risk environment. If you like ETH, then there's no additional risk really in staking it, which, remember, we're about to see interest rates go down, I believe, because inflation is going down. So you're not going to get high yield in your bank anymore, which you can get right now because interest rates are high. So like, you have this asset that is deflationary. It is likely the future of the internet, and you can get yield on it, like 4 or 5%, which is more than you'll ever get anywhere else in the financial system. That's pretty cool. And I think that a lot of people in the finance world are going to recognize that. And it's going to be a very, very safe spot to put your money now in ETH, which before it was all speculative that ETH will be that in the future. It is now that. To me, I think that is going to be a massive driver of capital into this space. But then we have things like Uniswap and even Arbitrum and Optimism and Rocket Pool, which are all tokens that feed off of this thing of Ethereum that are also profitable and doing certain features for it. So like, again, I don't know that mainstream comes in because of that, but I think a lot of capital comes in as a result of that. And I think that could be the thing that leads this bull market. Something speculative will come from it. It always does. Fundamentals will only get you so far. Right. And Bitcoin was the thing that did it in 2020, right? Everyone was like, okay, we're going to print all this money. We're going to inflate these currencies. Like, you should get in Bitcoin. Bitcoin went nuts in 2020. I think Ethereum might be that thing this time. But then what's the thing that we all speculate and go crazy with? I don't actually know. I think that this cycle is driven outside of the US. I think that it is Asia and other countries, maybe India, maybe Europe, probably in the UK. Those markets are really going to drive this cycle because of the regulatory issues happening in the US. That's another reason people are so bearish, is they think, well, everything's like security and blah, blah, blah. And it's like, who cares if the US makes ETH or whatever security? It doesn't affect, 7.4 billion people around the world. It just affects the 100 million people in the US. I think that we see a market driven a lot by outside capital outside the US, which is quite interesting. Do you have any thoughts, Jay, on what might be the thing that we all speculate on and go crazy with?
I was just going to say, that's why you got to keep continuing listening to Web3 Academy, because neither of us know what those things are going to be. But we will keep you up to date when those things do hit. And we'll make sure that we're not telling you about the hype, but we're telling you about the real stuff that we really believe in.
You know what actually it could be? AI. I don't know if you saw over the weekend, but there was a song that came out that AI created, a Drake and Weeknd remix.
Okay.
And it's a pretty sick song. It's very comparable to a song that Drake and The Weeknd would make or could make. They were not involved in the creation of this song. Yet, if you just listen to it on the radio or something, you would have no idea that an AI made it. It was just a TikTok creator made this song, and it's pretty dope. It slaps, as the kids call it. And the thing is that, so there's that. There's also a lot of videos that are coming out that are being made by AI. There's content that's being made by AI, whether that's text content, image content, whatever. this is a big problem to the internet, right? This is a
Mhm.
very, very big problem. And the easy solution to this is that when you put out content anywhere, you first sign a transaction that verifies it came from KyleReedhead.eth or Drake.eth. You know what I mean?
Mhm.
It doesn't have to be .eth. I say it's
Yep.
easiest and the most well-known. It can be .sol, to whatever. I don't care. But you just verify that it was yours on a blockchain. And it's very simple for something like Twitter, which they already do for profile pictures, verify that the person that published this is who they say they are and they own it, right? So I think AI is going exponential. We've talked about this on many episodes, and we need a solution. We need a solution very, very fast on verifying what content is actually real. And the
Mhm.
only solution to that right now, and actually the only solution to this probably ever, is blockchain. And I don't know exactly what tool does this yet. I don't know if this is like maybe Facebook and Twitter and them have to just like integrate into Ethereum or whatever to make this happen. But like, we're going to need to do this pretty quickly. And so I actually think that AI is very bullish for Web3 because I think it speeds up the adoption of like verifying content, right?
Mhm.
We've been talking about this stuff for a while, podcast NFTs and Mirror with news NFTs, but more of just like a fun new means of engagement. Oh, you can collect now instead of just liking and sharing. Well, it's actually probably going to become you have to do this. Otherwise, like, who's stopping someone from going and creating Drake songs and profiting from it? Do you know what I mean? Like, how is Spotify going to know what to put on their platform, what not to put on their platform? And the thing is that AI is as bad as it is possibly going to be right now in this moment. And then a couple seconds from now, it's also as bad as it's going to be. And it's going to continue to just be as bad as it's going to be because it's always getting better. And so the fact that we can already create a Drake and Weeknd song that you would not know wasn't them in 1 month from now, in 3 months from now, in 6 months from now, it's going to happen much faster and even much better. That gets kind of scary. So maybe it's those kind of things. And this actually plays off my theory of Ethereum because the killer apps right now in blockchain are not financial assets. Like a stable coin is probably the best application that we have. And you don't make money in stablecoins. You make $0 in stablecoins. That's the whole point of it, right? But when you mint a stablecoin and when you trade stablecoins, when you use stablecoins, there are fees associated with that go back to Arbitrum or Ethereum or whatever layer you're using. And that makes blockchains profitable. Same with this. If you sign a transaction to mint your NFT, it's not that there's like a financial asset around that. There could be, but it doesn't have to be. It's more just to verify you created that content, right? And so there's not really speculation around that. It's just a utility. And again, that is going to cost someone something on the blockchain to interact with it. So again, we have more use cases that are just needed in our world, make Ethereum and other blockchains more profitable. Right. So I don't know. That's where my mind is at right now.
Those are, I mean, gosh, I really hope that happens. We don't need to go down that rabbit hole of what needs to happen in order for that to happen. There's many players that need to be involved, many stakeholders. But I think your point is we believe in the future of ETH. There's been so many exciting things that have happened in the past year, from the merge to Shanghai, that really didn't get celebrated outside of a small community of crypto lovers that realized what was going on, not to mention real utility use cases. So there is a bull run happening and a future happening for these big blockchains like ETH that we really believe in. What will be the big speculative assets? There's just no way for us to know that. Who knows? Maybe music goes crazy. Maybe everyone starts buying podcasts because they believe, because we've never had a monetization angle for podcasts. I don't think so, but it's just not possible to know on the speculative side.
Actually, music NFTs is a good one because the tech is there. We've already tested it out during the bear market. And again, with this Drake and Weeknd thing, it's pretty easy to see why a music NFT makes sense. Whereas previous to this, it was hard to wrap your head around. It kind of makes sense now. So that's actually, you could be onto something. I want to say one more thing about how a cycle like this works, how a bull run like this works. Just because we say we're in a bull run does not mean we go from 2,000 up to 10K by next month, right? This stuff takes time. When we got out of the bull market or the bear market, I guess, of the last cycle, it was actually way before everyone was talking about it. We always call it the bull market of 2020, 2021. But we actually entered that bull market in 2019, right? And we went up and up and up. We 3x in prices. But then it like chilled for a bit, then COVID happened. So it actually dropped significantly. And then we started to go back up. But that bull market happened way before COVID happened. And people often forget that. And so that's the stage we're in right now, where there's the first stage of this bull market where if you're in it, fuck, that's amazing. Like if you were buying ETH in the thousands, that's incredible in my opinion. I mean, especially if you've been doing it last year, you're already up way more than the stock market's going to go up in the next, we go up 10% on average. You're already up 100%. The next decade of the stock market, you're already up that in 3 months. This market is fucking insane. This doesn't mean we go up straight in a straight line. This takes time to play out. It is the next 2 to 3 years we are in a bull market, right? Right now we are in the first stage, which liquidity, at least in the US, other than because of the bank crisis, is not really there. We still have high interest rates. But as the interest rates go down, as we start to print more money, which will probably take time, we won't be at 0 interest rates next month. We will be there by the end of the year or early next year. Okay. We won't be printing tons of money next month, but we might be by Q3 or who knows, maybe by the end of this quarter, depending on how bad this recession that we're in or going into comes, right? It's like this stuff takes time. We will go up and down. We might crab for a while, which means basically just going up and down and not actually like in any direction for a little bit. That's very common, but this is definitely the time to be launching products, to be investing your capital, though, like I would say the last year was the time of investing your capital. But don't wait for everyone to get all excited, everyone to be rushing back in. That's the worst time. If you're seeing things go bonkers, that's not when you want to throw in money. Now, when there's pain, when people are scared and you're worried about all this stuff, this is the time you put your money, because this is the time where you can make life-changing gains, not early or mid 2021 when ETH's already at 4,000. You got a little bit you can run with supply, but then it's like, fuck, you better sell. Otherwise you're going back down to 1,000, right? We're going to do the same thing. We're going to go up to whatever, 10K or whatever it happens. It's going to come back down. It's going to come back down to, 5K or whatever it is. Understand it's cycles. Just because we go up doesn't mean we're going to stay up, but we will be up a lot more than we were. Anyway, you got to understand the way that this works. There's a lot of ups and downs. Just try to separate yourself from the hype cycle, which you can do by listening to our podcast. We'll continuously remind you, and heads down, build your businesses, launch your products, create value, invest your capital in things that are producing value. And you're going to do really, really well in this cycle coming up here.
And once your aunt comes to you at a Christmas party and asks how to invest in crypto, that's your sell signal right there. Sell.
Don't tell them to buy.
Yeah.
Don't tell them to buy.
Don't tell them to buy.
That's the thing I learned last cycle, right? At the next fair market.
Man. We want them in. Adoption. Let's go.
Yeah, but then you got to go to Easter the next year and explain why they're down, 78% of their investments. For those listening to this podcast, if you're in our Discord, please go to the general channel of Discord and give us some of those stories. We'll talk about them on the next roll up, because I think those would be hilarious. I think everyone has that story that was here in the last cycle. So please share that wherever you can in our Discord.
This is a really great episode. Thanks for sharing all your knowledge and for helping us all navigate this bull run, which we are in right now. We are in a bull run. That feels good to say.
It does feel good to say. And we've just created a markets channel in our Discord. And so if you want to continue to be updated and chat and ask questions, join the Discord, check out that markets channel. If you really want the alpha, go pro. If you go pro, I did a masterclass on macro a couple weeks ago, 2 different weeks. We talked about it. We did one on-chain markets just last week. Months ago, we talked about this business cycle and kind of where things were at and said you should be investing capital. This was back in January, which you've done that, you're up 100%. If you want to stay ahead of that and continuously stay ahead of that, then go pro. I'm telling you, it's super cheap. It's $18 a month and it's well worth it. If you pay for the whole year, I think $15 a month or less, $14 a month. So it's already worth it if you've been in it and you've invested and you've listened. So make sure to get in pro, because that's where you're going to get the most up-to-date advice on this hype cycle.
Awesome. Thanks so much for listening in, everybody. And we will see you later this week on the roll up. Have a great week.
Thank you for listening to Web3 Academy. We hope this helps you along your Web3 journey. And if it does, please share this episode and subscribe so you don't miss the next one. Nothing in this podcast was financial advice. Crypto and Web3 can be risky. You can literally lose it all. In fact, if you invest on account of what we say, you probably will lose it all. So don't do that. In all honesty, the point of this podcast is to remove the noise of markets and price and focus on utility and implementation anyway. So you should not take any of this as financial advice. Thank you, friends, and see you in the next one.